It's after 12 o'clock, it's about 12:04, and we are here with another edition of Chart the Markets. With thanks to our good friends at FEG Token and smartdefi.com, and of course the support of BYDFi Exchange. We are here again to have another day of charts, conversation, and maybe a little bit of honesty about what goes on in the markets. And we're very fortunate today to have, once again, our friend Carpathia from Carpathia Capital. And they say that you can tell a lot about a person by the friends they keep. And I consider myself to be fortunate to call Ken a friend. And I respect and admire his knowledge as someone who has been in this space for a very, very long time. And Ken will look at the markets and maybe charts a little differently than we do, because his experience is more managing large amounts of money and not necessarily active trading. But his experiences and perspective, I think, are something that everyone who comes in here should hear. We talk about how it's important to understand why we are here. Like, why are we in these live streams? Like, why do we do this every week? Why do the same people come back all the time to try and continue to learn? Everyone will have a different reason. Some it's because they need to supplement their income. Others it's because they're just fascinated by markets. And for others, they'll have their own set of reasons. But whatever your reason is, don't forget it. Don't ever forget why you started doing this. It's as soon as you forget why you're here and why you were learning in the first place that you need to ground yourself. And it's easy to get caught up in the mania. And the trick is to, how do you not let the highs get too high and the lows get too low? How do you keep an even keel? I know how I do it. I do it by trying to block out the noise. Anything that would cause me stress or anxiety, I try and shut it off. And I focus on the chart. Just like, the chart that we're looking at right now, that I do want to speak to quite quickly, because this is an example of something we show all the time. And there's just a couple things on this chart. 5 EMA and the T line from our script, the buy and sell signals, volume profile that's also part of it. And I brought this up, and this horizontal line is here because that was a stop loss for me. And I just want to demonstrate how this works time and time again. So where are we trading? And again, this could be a stock, it could be a commodity, it just happens to be a crypto. But where are we trading? We're consolidating along the point of control. And we know, because we have the upper value range and the lower value range, that it's obviously accumulation, and it's just a matter of, do we go up or down? Well, the volume profile, yet again, is a target. And I'm showing you this because I want you to understand how simple this is. 3 things on the chart, two EMAs and a volume profile, that's it. When price either breaks out or breaks down from a concentrated level along the point of control, your targets automatically become those gaps. And ultimately, you want to be short to the lower value range or the shelf. And this rings true yet again. But the reason that I have this horizontal line here is actually because that's where I got stopped out. So I got stopped out on this little candle right here. That little wick stopped me out. But what did I do? I do the same thing that I tell you to do every time we're in here. Okay, so I got stopped out. Big deal. I don't care. But was my trend intact? Yes. So what did that give me an opportunity to do? Re-enter the short. with a more than reasonable probability that it would continue to run because, again, just to demonstrate, that little stupid wick is what knocked me out, but that's okay because this divergence was still intact, and I'm simply speaking about the distance between the 5 and the 8 EMAs, and then the trend down continued, and the original target on the 15-minute was always the shelf or the lower value range, and we hit it. I just wish this could have been a little bit later in the day, like right now, so we could have showed you in real time. But these are the types of things that will happen to me and to you on a daily basis, right? Everything we talk about in here happens on a daily basis on our charts, whether it be for fractal reasons or whatever the case is, right? So that was always a target. But if we add our fibs to it, because we're always trying to add a layer of reassurance, we still have 618 down here at 09685. But the original target for me was roughly in here, the shelf of the value range. That's it. Set it and forget it. And your stop was right up here. My stop was right up here. Just above, actually, in here. And it wasn't a problem. The only area it was a problem is when I got down here. Because I was dragging it down, trying to lock in everything, and on that impulse wick. And I should have known better. I should have kept it above the T line and the 5 EMA, but I didn't, and the wick hit it because I know price is coming back to those levels. We talk about it all the time, right? Nevertheless, it gave me the chance to get back in the trade, just like it would you, and you can enter that with a reasonable assurance that it's going to continue to trend in the direction that you want. And I just wanted to share that with you because that's something that happens, again, every week. Every day. And again, it doesn't matter what we trade. It just doesn't. It will all turn out the same way. Right? Fibs, fractals, and filters. That's all I'm using to try and make sense of this chaotic thing that we call a market. So Ken, I think we're at a very interesting point in time, and I know we get a chance to talk about it on a little more regular basis, but this is kind of an opportunity for us to talk about what's going on around the markets, how it affects the markets, and then how we can use the charts to determine where things may go. And I brought this chart of YM up because it's basically the contract, the futures contract for the Dow.
Yeah. Let me just pile on a little bit there. Thank you, Mark, for having me. The whole time Mark's talking, I'm sitting here Googling pi and pi relationship. And I just have to layer some goo on top of that. That'll, maybe y'all know this and maybe Mark knows that. When he's talking, fibs, fractals, and filters, essentially what we're doing is we're mathematically measuring human behavior. Okay, so most humans are batshit crazy, but we're still herd animals, and we're still subject to mathematical certainties. So I Googled the pi in relationship to biology, and pi is a constant. But then you can use pi into the stripes of a leopard and a zebra in the pattern and size. So when Mark's talking about these numbers and these value gaps, what you're essentially doing, every market has, and you always are going to have external events, right, that shock the vibration, so to speak. But what you're essentially doing is you're looking at footprints of human behavior, and there's uniformity to it. And it's I don't understand why. I mean, I don't understand why the leopard's spots are perfectly encoded with the number pi. I'm just reading over here, but it was striking when my mind was racing when he was talking, and that's essentially what you're doing. So you want to use mathematical footprints to help you in your trading, and then the most important thing is don't become an animal of emotion. And that's what Mark's describing. So you're using the herd and you're using math templates to help you. And then if you can reduce your own enemy within, then you have a huge advantage. I think that's just something I wanted to say, Mark, because my mind was racing when you were talking about that. And I think that's what's essentially what we're trying to do. And it is a science, and it is a huge advantage, and you can profit from it. But the most important thing is be dispassionate, and that's hard. That's the hardest thing to learn over 40 years. And I was telling Mark before you guys came in, you know, there's a lot of, between your ears is the hardest thing because you have your upbringing with your parents, you have your experiences in college or not college or whatever, grade school, because we're human beings, right? And it's hard to control because your ego gets involved. And one of my favorite sayings in the markets lately, and Mark's heard it 100 times, um, you know, have strong opinions loosely held, right? So when you see a pattern or an opportunity, you got to have I got to be careful. I was going to say something crude, but I won't. You got to have the stones, so to speak, to put it on, but you can't let your ego get in the way. So anyway, I wanted to say that real quick because the Fibonacci numbers, they're all based in study and science, and a lot of the books I've read and Mark's read the similar ones um, are truth. The math is truth, but then at the last minute, there's a fractal and it just blows up. You get an avalanche or something like that. So it's never 10,000%. I'm guaranteed to do this. It's a percentages thing. So anyway, Mark, go ahead. I'm sorry.
No, not at all. Listen, I think it's important that everybody hears this perspective because, so really there's two things, right? There's your perception of what we see, hear, think, and feel, and that is something that you do within yourself. And then there's perspective, which is a more outwardly look, maybe from the view of someone else, right? Where it might be a little more objective. And I think that the perspective within the market, to me, is fascinating. Because
Well, you're trying to learn. Go ahead. I'm sorry.
no, it's okay. When we look at these charts, and this is just a daily of YM, and I'm just using YM because I like the volume profile that I don't get when I chart the Dow. Nevertheless, the chart was telling us right in here, that's the Thursday, the 12th of June, that, you know what, something's getting a little funky. Now, how do we pick these things up earlier? We just drop our time frames, right? Because we'll see these things on the 4-hour or the 1-hour before we see them everywhere else. But because everything is fractal, and you saw in that 4-hour chart how we found the 200 MA on the 4-hour in the breakdown. So in here was the 200 MA on that 4-hour. But simply from this chart, we start to see, points and flats, points and flats, points and flats. On your short-term averages will always give you some sort of an indication of a change in direction. Here's a point. Points mean it comes with some exuberance. Flats, a little easier to read. They're not as hot, right? The impulses cause the points. Steady price gives you more of a flat. But ultimately, the outcome is the same. But nevertheless, we can see these things coming. Points here, points here. our 5 EMA that we use, that we've tweaked a little bit, gave us a little clue that we were going to fade. And we did. But we really didn't get a confirmed signal till back here. But our charts were telling us that the market was fading. And I don't know why, like at the time, and I don't think about it, I try not to, because it just gives me a headache, right? I don't essentially care why things go up or down. Like as long as nobody dies, right? I guess is what I'm saying. But I'm indifferent to price, right? I don't care if price goes up. I don't care if price goes down. And I certainly don't care why. Because the more time I spend thinking about the why, the more that I'm missing on my chart.
And what your chart's doing there, Mark, you know, these synapses are firing off. I've had too much coffee, but what essentially this tool, what he's teaching, and I'm old, is how to peek around corners dispassionately. So what you're, like a kid used to do that little thing with the mirrors and stuff. And, so you're trying to peek around a corner to gain an edge. And your emotions is going to prevent you from peeking around the corner because it's not pure. Now, I am different than Mark. I'm a hybrid. Like, I love the technical because I believe it's the footprints of big game hunting, right? It's showing you the human emotion, but it's a tool to peek around a corner. Then when he's showing me this chart, I know his system well enough to be dangerous, right? And so I'm like, okay, we're peeking around a corner. But being a hybrid, I know some GAN stuff, and I know some, other stuff that's going on around the solstice, June 21st. And I don't let any of it get into my soul, right? But I'm gonna look at these charts and I'm gonna say we're peeking around a corner. What do they mean? What do they represent? And the only thing you can control is your actions from here. Mm-hmm. And that's the best way to do it in this environment right now. For now, it's really condensed right now, in my opinion. So there's times like when you trade. What's the three things I think I told you, Mark, this week? It was size, scale, and pace. Yeah. Size, scale, and pace. And so those three things, when you're thinking size, scale, and pace, and like I said, I'm a hybrid, but there's times in the pace of the market that I will get small. And what I mean by get small is instead of doing X amount of shares, I'm going to try not to use numbers because money does weird things to people. That's another thing you need to write down. Mm-hmm. Money does weird things to people, good and bad. And the pace of the market, the size and scaling of it, because honestly, the market doesn't care what you paid, long or short. Nobody cares. The market doesn't, except you between your heads. So when things get a little iffy, I downsize and I scale is probably not the right word, but I always, unless it's a special situation, I always average in or average up and average down some. I don't like to do that so that I'm not committed like immediately to some big position. Mm-hmm. So your scale, but then if you see like see ball, hit ball, so your scaling and the pace may be quicker, right? At that particular time. I'll use an example, very controversial name. I shared in our Discord, and I have flipped on that name by hating it and then loving it. And it doesn't have a penny of earnings, but it's very controversial, and there's 50 million shares short. Well, I scalped 7 points out of it because the setup was good. And but so I scaled very fast. So that's another thing that you got to learn too. Just your sizing, your scale, and your pace. And if you size small and it works, just shrug your shoulders and you move on. Because there's somebody I know, I don't know who he is. He says there is no perfection in markets, but it's me. There is no perfection. So just get used to it. You're going to miss I mean, just watch a baseball game. The best hitters, they strike out sometimes staring at a pitch down the middle. It's because their mind wasn't right.
Yeah.
At least swing it. It's their mind. They're looking for a curveball. They're looking for a slider. Their mind wasn't right, and the fastball got them. Same thing here. You're gonna miss opportunities. You just get used to it, and you shrug. But if you hit enough of them, you're gonna do very well.
So this is my own personal experience is that the as much as I love technicals, and I do, everybody knows that. I often believe, more often than not, that it's less is more, right? And I I'm the type of person that can fall into the trap of being overly analytic. Like when my first 10 years, I think, doing this, I have to admit that I believe that's what I was doing in hindsight. I was overly analytic.
Wait a minute. Give me a second while I overthink this, right?
Exactly, exactly. I was the master of that. It really was. And that's why I speak so much about blocking out the noise, because I know how it affected me. And the way that I got over that was finding ways to simplify the chart, which is ultimately applying filters of different types, um, and using fractals. And it was around this time that I'm becoming more aware that this is a language, right? It really is. And for everything that we discuss and talk about that's confusing and complicated or maybe difficult to understand about the reasons why things might do what they do, I think what's on our screen is a real great example of how to simplify it, truly simplify it. And this is just another tool that we have. These are Heikin-Ashi candles for those that don't know what they are. Just another form of candlestick. They're great for trend, not so great for specific price on your chart, because as you'll see, like here's the body of this current candle, but yet this little red line is actually price. So price is not here, it's actually down here. And the Heikin-Ashi candle has a little bit of a look back as it's calculating the next candle. But what's great about them is that they filter the noise off the chart, right? So we already do that by using the T line and the 5 EMA trigger. Right? Our script is working in the background, filtering out false signals, and then now we have a little bit of a show that there's a fade, but there's not much going on here, right? That's a filter itself, and then we just add another filter. So we're filtering the noise of the candlesticks. Whoops. Right, so all of this in here that looks kind of manic, we filter out so that we can just go, oh, okay, that makes a little more sense. Right now, we have to trust our charts. Because so it's one thing to have a belief system, but it's another thing if you don't apply your belief system to your trading or your investing. So we do some simple stuff, right? We have a formula for giving us good signals, right? There's no such thing as a perfect world, but we get really good signals. I'd like to think today we get better signals because now we have the ability to show through our 5 EMA changing colors from white to red. So it gives us an opportunity to catch an early entry. So, the safe, profitable one comes when we get the signal, but the early entry is always a gift if you can get it. And if you're running tight stops, there's limited risk with this system because we have price just doing what it's going to do. As long as it's trading below these levels, everything that we see on the news, everything that we hear in an X space, everything that we read is literally irrelevant. It's just what price is doing on the chart. And we're filtering out all the drama, right? Nice clean run down, nice clean run up. They're not all runners. But eventually, you catch one, a real good one. And on top of that, we can also manage the volatility. Like, this is a daily chart that's like for a Heiken Ashi chart, this is a little crazy. Um, but simply because of the volatility. But it doesn't change how we interpret price on a chart. As long as we are trading below those levels and our divergence is intact, you still have a confirmed downtrend. Now, most people would have been taking stuff off at the wicks and hoping for the snap back up, and they got it. But it didn't last. Fades a little bit, and then price takes off again. The reasons why it did this, I don't care. Interesting conversation, but ultimately the chart will tell us, here's an early signal, here's your confirmation. This is just the insurance that you would pay if you entered here. And price takes off. This is a futures chart, so again, when people are trading futures, how many of them are trading short, like dailies or zero days?
Very down. They're doing hourlies and 4 hours and stuff, but I am intrigued by your red arrow there.
Yeah.
So the only
So
thing I was gonna add is be conscious of Mark's right. You don't care, but be conscious of where you are in the pace, right?
mhm.
Where you are, like overall. Don't listen to all that stuff, but I'm looking at this chart and I would say, okay, I've already missed the big entry down there. It is green arrow back in April. For um, I captured that up move, but in my own little way, right, in like idiosyncrasy names and alternative names. But I would read this right now, guys and girls, ladies. Okay, he's got a red arrow and it's below the 5 and the T line. And this is just a neophyte just using Mark's work as okay. I'm going to be defensive. I'm not going to be aggressively long because we've already had this giant rally from April or whatever it was back there, right? So if I'm reading that right, I'm looking for a better entry if I want to be long. I am currently put some shorts on. I currently am short, but not aggressively so. And as you know, Mark, I'm using Apple as my surrogate because it's so big in the index and it never really rallied as much as some of the other names.
We'll look at Apple too. Um, so if we look at this chart, I just put the Heiken Ashi candles back on just to take out some of the kind of crazy noise that we see. But this chart is telling us, and it's very interesting because after each one of these moves that we have that are very convincing, the next one that comes up, I feel like I always have to sell like it's the very first time to someone because they don't want to believe it. Right?
Well,
But
that
then you
would,
just look
that,
back and
yeah,
go,
they
what
don't
about this one? What about
exactly.
this one? What about this one? What about this one? Why is this one going to be any different? Right? The market is telling us, again, this is the language of the market, and it's up to us to learn and understand it so that we can monetize the chart. It's a treasure map essentially, right? These are Heiken Ashi candles. This particular candle has no upper wick. Notice that? So that would be a candle that I would like to enter on. It just so happens that it's actually giving me a sell signal on on our script. So in this case, you have a red candle with no upper wick. That would be a candle I would consider entering on, and if there was a parabolic above it, it would be even more convincing. But now that we have this confirmed sell, what's actually happened here? Well, here's our point of control, right? And price has kind of grounded itself a little bit there. But we've been having, the 20 AMA keep us above water until today. And it just split it in half, and it's fallen into the gap. Now we know that when we break one level, we ultimately are looking for the next. And here's the 50. That's at 41,524. And where's it sitting? Right in the middle of this deep gap. So am I more inclined to feel like the probability of it finding it is pretty strong? Yeah. How else do I
I am too. by the way.
Yeah, exactly.
You're anyway, you're confirming. I'm not going to get into it, but I have two or three other inputs that I use that are pinging enough in conjunction with what you just showed me, are pinging enough to where caution is warranted. Let me just put it that way.
Yeah. No, that's fair. And I'm just doing this from a technical perspective, right? So one of the things we talk about here is just taking some very simple elements. We started with, two EMAs, the 5 and the 8, throw on a volume profile. And now we're using some simple moving averages to complement what we're doing. And we're using these simple moving averages because we use them A for targets, and there is a way that price behaves around them at certain points in time. So for example, the first touches on the way down typically get support. On the way up, they typically get some resistance or fail. And here we're failing a major moving average, and one is drawn to the other like a magnet. But to layer on even more, and I've put this little thin horizontal line here for a reason. So this is our little doji candles, that's followed by the fade in our 5 EMA that we see, and then we start seeing red candles. But on top of that, one of my favorite setups in the world is when I see the stochastic RSI that I like very much, very overbought. Like you can see, it's pressing its head against the ceiling. At the same time, when the Fisher's overbought, and then showing me that there's a trend change because the Fisher transform is a filter. That's why I use it. It creates a Gaussian channel that filters out noise. And that's why it gives us more of these clean moves up and down. Occasionally they get a little choppy, but nothing like many of the other indicators that we use. And again, it's filtering out noise. But it doesn't lie to me. When it turns over, shows me this divergence, I know with reasonable confidence that we're channeling down. So the same day that we got that doji candle, we also got these signals up here, these kind of arcing over and crossing that the trend is changing. So we're just layering, and confirming that price is going in the direction that we think. And once we've established that, we're using our volume profile to identify where price and volume has and has not been, so that we can determine where it may go. Using our moving averages as an example to help validate that, right? So there's our 50 sitting in the middle of that volume gap. I feel very comfortable that that would be a target until, some of our momentum indicators maybe tell us something different, but until the chart does, that's what I'd be working off of. And this
and I use this mainly. I'm sorry. Go ahead, Mark.
I'm just saying this is really simple.
Yeah, and it's markets go up 80% of the time. So the way I use this work is keep your long small, run some hedges, and 80% of the time the markets are long. But the Mark and I did very well even before the big down days in April, and but you got to believe what you see. So I would concur. There's some other things that I know that are different, but when this system that's dispassionate, right, matches or rhymes some other inputs, I'm very cautious about speaking because I don't want people to overemphasize things that I've learned over 40 years. And it's just a way to wash over me. And then when I see the actual footprints happening, then I know, because of the time frame, it's reality, and it's actually registering the money flow. It's registering the thesis and the other inputs that I see in. Then I act. Like I see he has Apple up, and I'll let him go over it. I probably have bias here because I have a strong antipathy towards 60/40 passive, systematic passive, and the mechanical trading that's gotten so large in the last few years. So, just so everyone's clear, when we discuss Apple, I don't hate Apple. I just feel like it is a component of the Mag 7 that's lagging business wise. And you have a couple of things going on that I use the analogy. If the market is doing what the Dow Jones chart is doing, I'm not going to go after CoreWeave on the short side. I'm not going to go after Nvidia on the short side. I'm going to go after the weakest member of the herd, right? When you're a Native American and you're hunting buffalo, you go after the one that's lagging or limping or whatever. You don't go after the hardest, the most. And I think Apple has that component to it from a standpoint of international investing, repatriation, and I have a good feel for the chart. And I think if the markets go down, Apple's what, the third or fourth largest market cap component of the spies. So you'll get natural liquidation. So I don't have, like I said, I don't have specific dislike towards Apple. I just feel like it's the weakest member of the herd right now.
It's
And
it's
if you
it's
get
the
the herd going
silverback.
down, well, it's a limping silverback.
Yeah, like there's going to be a new gorilla that's going to come into town and take out the old gorilla.
Well, I mean, we'll see. We'll see. I mean, it's easy for me because my system has it in a downtrend. It has it in identifiable targets you'll go over. So,
Yeah,
and it gives me exposure to the spy that is this event that is occurring that you just gave us visual um, clues. I happen to believe, and we won't, I'll just say it. I happen to believe the percentage that this rally fails, I'm like, they're going to tell me, everyone's going to say, I'm like, I'm a bomb thrower and I'm like Mr. Negative. I'm not, I'm still long a lot of shit, but a lot of stuff. But I think the percentage chances that this rally rolls over, like some of the previous big events, aren't zero. They're not 60%, but they're not zero. They're somewhere in the 15 to 30% range that it could fail. Go ahead, Mark.
this one is super interesting for obvious reasons because of its size, because of its longevity, and it's a well-known brand, right? Like there's no question about it, and it has been, really the shining star on the hill for a very long time. In doing that, though, when your price goes nowhere but up for very long periods, and we showed this last week on some shorter time frames, when price spikes, it fans out all of your averages. But we know those averages are representations of time and price and liquidity and all those wonderful things. And we know that price will ultimately, and time, come back and meet. The problem is that when you have a company like this that's so adored and everyone's just bought it for so long, the thought of it failing or even tripping and falling a little bit becomes problematic. But we know that the chart doesn't lie to us, right? It's a representation of what money is doing and not what people are saying. We show on different time frames on different assets every time we do these sessions how price behaves, and it doesn't matter if it's a crypto or a stock or the time frame that we show it on. This could easily be a 5-minute chart of Bitcoin or a 15-minute chart of Bitcoin. And this is the spooky part, because it comes back and behaves the way we expect it to 9 times out of 10. And if we look at this chart, and this is a monthly of Apple, and we just look at the very simple things we look at each and every time we analyze a chart, what do we see? Well, we see at the top that we have our 5 EMA, our short-term time frame, even on the monthly chart, is sensing a price fade. Remember we talk about these big knuckles, right? This like this, when price gets too far away, like the horse that's far away from the barn, right? They don't like to be too far away, and they'll come back hard, and that's what happens, right? So every time you see these knuckles, kind of keep a half an eye open, because typically it means that price will come back and at least try and test, and in many cases roll over like we see here. So we would have known back in February, the beginning of February, or even if we were to probably have to wait till the following candle to start to see the red, but let's just say that it was March. Why, and this is the best part, and I'm sure Ken can attest to this too. Weeks and weeks after either a big run or a big downfall, you know, people are acting, you hear them how surprised they were, no one saw this coming. What nonsense. And it's nonsense because those people weren't looking at the right things. If you tell me that no one saw this coming, I'm going to call BS each and every time, because I'm pretty sure I can find a place on the chart that will tell you that you had lots of warning, that the market itself was telling you, hey bud, we're about to roll over here. The problem was you weren't looking and you weren't listening. And if you're not looking and you're not listening, you're not learning. It's as simple as that. Now, Ken knows that one of the things that triggers me is when I hear people that were around in 2008 talking about like they know what the hell's going on today. The same people that couldn't read their own charts 15 years ago are trying to tell us what's going on today. Are you kidding me? Shut up. Find some objectivity somewhere, please.
Calm down.
Right?
Calm down.
I know.
I fired in 2008, just so everyone knows, I was short Fannie, Freddie, Downey Savings, and I was talking to Michael Berry before he started his fund earlier in the year. And my history is I would, you know, if you opened an account with me, I had full discretion, and you paid a 1% fee minimum, maximum 2%. And I was short all that stuff. And it was just so much noise. And before it rolled, you know, the Big Short I watched the Big Short once a year because I lived it.
I swear you're Brad Pitt's character.
No, I'm not. I wish I was. But I mean, I lived it. I had an account I took from 3 million to 13 million. And he hired me in 99, and I kept him out of the bubble in 2000. And so I ran his money like I ran my money. And he cost me at least $3-4 million because he was a good friend too, and we liked each other. We're still friends. I mean, we don't talk like we used to, but he'd take my call and I would take his. We're friends. But I screamed into the phone is closed right at the beginning in August of 08. I caught Downey. But he just was destabilized, you know, to address the mind game of this, right? Mm-hmm. He was destabilizing my mind. And, you know, you can't run money, or you can't run your account if somebody's in your face every day using foul language, because he was, you know, he owned steel mills and stuff, which was fine. I mean, that's just the way that industry talks. But I screamed into the phone, move your fucking accounts. And he did. But I took, was it $80,000 a year pay cut. And I survived. And I went on to have, you know, my best years ever in 9, 10, and 11. But what he's talking about is, now we're gonna get off the rails or anything. So I don't want to go off the charts too much. But there's a component of being contrarian, but not for contrarian's sake, right? Don't be a contrarian just to say you're a contrarian. There has to be a component of reality. And I don't want anyone to think I'm anti-American by being short Apple. I've traded it how many times, Mark, now? 3?
At least.
At least. And, you know, I'm not hitting it very hard, but I'm hitting it with 30, 40 puts. And, you know, they'll double or triple. And then, you know, what I've done this week is I've reduced my put size, but I'm using the inverse ETF AAPD because it has a really and I'm adding a component here that Mark will shrug his shoulders and say, you're adding too much. But I overall am a little distrustful of this rally. Just a little, not a lot. Like I said, there's whatever my percentages were, 10 to 35%. But, by the moment, looking at Mark's charts, I'm probably raising them. But my thinking is, on the short side, you just want to add alpha and try to get some extra cash to hedge because your longs will probably go down. But I hit the crowd alpha pretty hard too on this rally, not perfectly because of other personal things, but I hit the eToro trade. I hit the Robinhood trade long. So I don't want to come across as Mr. Bear. You trade what works. Go ahead, Mark.
Can you define when you say alpha, what that is for people?
Okay, for me, alpha means something different to everybody, right? For me, I'll describe it. You can go Google it and find out what it is. But just for me, I have my base portfolio, and it's about 47% short T-bill. I mean, long T-bills, and I have some natural gas pipelines that pays cash. But then what I run is I believe in the monetary wave, so I have a lot of hard assets. So just so you guys know, I firmly believe that on a large 40,000 foot basis, that we're going to switch to a combination of commodities and international performing better. And I've been saying that for how many years, Mark? 2, 3.
Mm-hmm.
And since the bond market, so I don't want to get too in the weeds here, but the bond market yield broke a 40-year downtrend in January of 22. And then, I never watch Bubble Vision, CNBC, but I do on Fed days because Jeff Gunlack's on there. Not that Jeff is the shining star, but he literally sounded exactly like our private Discord where Mark and I met. He's like, okay, no one's acknowledging it, but international is performing. So I have a template of stuff, right? And generally stuff. But alpha for me is purposely trading or putting a trade on. And when I say crowd alpha, that would be me going long CoreWeave or me going long Circle or me going long the 2X Bitcoin, which I've done in the past successfully. This cycle I chose to use maybe not the crowd alpha. And what I mean by that is it's not my core investment belief, but I still printed 5 to 6 figures. But it's difficult to turn your brain. You got to be almost ADD, and you have to be a little bipolar to where, okay, I can think this macro theme, right? I'm a macro deep value growth momentum guy. And my weakest component is the growth momentum because I don't like being dependent on crowd behavior. But you can extract, if that's the hot craps table and everybody wants to trade Circle and everybody wants to trade what have you, I'll extract with smaller dollars, I'll extract a size of money. And there's somebody who says that money spends. I don't know who that is, but that money spends fine. Like, I run a pretty big portfolio and I ran a fund in the 90s. But if you can knock down $5, $10, $15, $20,000 on a couple trades, when you go to put a down payment on your house or a car or take your wife out to dinner or girlfriend or boyfriend, that money spends, right? Mm-hmm. So, it's very, very profitable, but it's something I don't wake up in the morning and look for that alpha. Alpha is just adding something extra to the base portfolio. And that's the way I would describe it. It's not maybe the textbook description, but I created, I believe, somebody stole it on X, which pisses me off. I'm being less and less verbal on X because somebody stole it. I literally heard the term crowd alpha, and I'm pretty damn sure that I invented it. And crowd alpha is, okay, where the activity is. What are people playing? Where's the crowd? It's like going into a casino, which I know none of you do ever, but that's sarcasm. Sorry. You go into a casino and there's a hot craps table, right?
Yeah.
I don't gamble anymore, but within the markets, but we would go to hot craps table because the good looking women were there and it's fun. And we had a system to play. We had a few drinks. And that's what when crowd alpha is, that's, what everyone is playing, and, try to gain an advantage with your charts. So that's alpha for me. I don't know if Mark would agree with that, but that's my definition, that it's not my main investment thesis, but I'm throwing some gasoline on the fire.
Well, I think it's one of the things that probably gives you your edge too, ultimately, is the willingness to be able to do that.
I'm willing to do it. I know it's profitable. I know I don't do it all the time. I'm trying to do less and less. But if you see a fat pitch, you got to hit it, right? So I'm a big believer in the money line, guys, right? So the number line. So your thinking should be dispassionate, and you should not be emotional. In fact, I'm going to have to buy one and put it on my desk, but I'm traveling a lot. Think of it as a money line, right? So, negative on the left, positive on the right, and you're at zero. A lot of people will sit in the T-bills and say, well, I didn't lose any money. And that's true. You didn't lose any money. I look at the markets as a number line. If I get a fat pitch based on Mark's work and my system, which is probably a lot more extensive than it should be, but it is who I am, and I get a fat pitch and I don't take it, that's -3, baby. That's not zero. You're -3. You missed in your ability and your skills, your God-given ability and skills that you're spending your time, and you didn't swing at a fat pitch. That's -3. So that's no different than trying to do something and you thought you were going to make +3 and you lost 3. That's a -3 too.
Yeah.
So you got to develop the mindset of you're a hunter, you're hunting opportunity, and you're not going to be perfect. And the other thing, the market doesn't give a shit what you paid or sold at.
No. And
Doesn't care.
and the hard part is knowing, like, when do we swing at the fat pitch, right? And I think that is always the dilemma for I think every existing trader, probably till the day they're finished doing this, and certainly the new ones, right? That's the question that I get all the time, is that there's this willingness to learn, but it's like the hardest thing to learn seems to be, when do we take the trades? When do we buy and when do we sell, right? And this is what we're trying to do here, is to hit the pitch that you're talking about. And like, this chart here is a 4-hour Bitcoin chart, and there's a reason that I'm using it, because we've been talking about it over the last little while. But coming out of this consolidation, you get an entry signal like right at major moving averages, and you would have seen this divergence already forming up, so you're going to take a run in some way. You just don't realize it's going to be what it turned out to be. But there's the pitch, right? There's the fat pitch.
Yeah, so, and then and then I add I trade BitX very, very rarely, but I try to use the charts on that, and I try to use I use the hedge eye risk ranges on their crypto product. But because I'm a little bit of older, and I don't really want to get caught in some of that, but they do give you better charts. Mark and I've discussed that. It's a purer signal. But they're right now at 103 and change. They're right on the risk range that I have. I don't pay for the dynamic risk range, but that's an implied volatility trend band that they use. I don't want to go into it, but Bitcoin's a different animal. But you're right. When you see a fat pitch, get it. And the other thing I'd add is be honest with yourself and keep a spreadsheet, and accept your losses and accept your gains, and try to build equity, try to save money. And then I'm old school. I print off the any day calendar in every account. I run 7 of them. And, each week, each Friday, I put the value of each account in total, everything. And that way I know what my portfolio is doing versus what the market is doing.
Mm-hmm.
And I think I've explained that to you, Mark, but
Yep.
I know whether I'm in rhythm or out of rhythm with the actual scorecard, which is your money. Go ahead.
Yeah.
Sorry.
This is the chart and I'm showing this because a few weeks ago, or maybe even early last week, we were looking at this very same chart, and it was a Tuesday that we saw this candle. It was our Tuesday session, and we saw that wick at the top of this body, and we drew a line there. Simple stuff, right? Like drawing lines. Does it get any easier than that? There was on the chart at the time, I think we just had the volume profile. Let me just
Yeah, and it ran to 112 or something, right?
what we ended up doing is we fell right into the area. So here's what we knew. We kind of topped this as a range. We knew that we were paying a premium because this is our upper value range right here. Here's the lower range, and here's the POC. And what we believed would happen is that price would eventually find the upper value range because it was failing this breakout level. It would find the upper value range, which it did. And then it broke, right? So now we have the divergence that we talk about. We didn't know.
There it is.
We had no
Yeah.
idea. Like we say every week, we don't know what comes after the candle that we're looking at. Is all we know is that this was resistance and it failed. The market was telling us through our 5 EMA on the short term that it was fading. We can choose to listen to it or not. That's up to us. Here we get a signal. The divergence is intact. A little bit of a doji, nothing to really get excited about, but what happened? Impulse down, like we talk about, and then sideways. You wait until you get close to these two. So the sideways is telling you that there's nothing going on, right? The buyers aren't coming in, and then it'll fade, right? And as long as that divergence is intact, you can pretty safely assume that price is going to fall. And what happens? Boom, it does. But what's interesting is the wheres, right? Another example. So we are under a confirmed sell signal. Again, Ken, we talk about this in this stream every single week. The divergence is what I'm paying most attention to. These big ass candles, they just cause me stress and anxiety, right? That's really what they're good at, is causing you stress and anxiety. But what do I really want to know? I want to know because our system told us that we could get in up here safely, which we do. Down here, when I see these big candles, or if I was to see these big candles, I get freaked out, or maybe stopped out. But the chart was telling me, because there wasn't enough momentum, even with that giant green candle, to drag the short term above the T line, that we were still good. And here's what we talk about. And this is what I want to show these guys all the time, because just another example that it works. So here's our candles now. So we have this big green candle that can't pull the short-term 5 EMA up through the T line. And then the next candle forms an equal top. This is your opportunity to get back in your short if you were to get stopped out or scared out. Because the divergence is telling you this is what you'd be looking at, right? I lose sleep looking for these things, right? Like this is money for me. Move up, impulse, fades, bam, short that sucker.
Yeah.
Right? And if you did get this way, so here's what happens to most of us, Cat. Even if we got in up here and we got stopped out, then we're pissed off and we think, oh, done, the damn thing is over and you're not going to trade it. And then the next thing you see is this, right? Because is all we have to do. Forget about what you think. Just look at the chart. The chart was telling you you were still good. You just didn't understand because you just didn't know. But now we do. And where did price go? To the next level that we can anticipate was the point of control. Ultimately, what was it looking for if it was to fail that? Oh, hello, the lower value range. And all of that looked batshit crazy at the time. But look.
Yeah, I mean, there's another saying somebody likes to say is there's always going to be another trolley or train,
Hmm.
and that's a good thing to remember because you don't have to take the trade. You don't have to do anything. You
Yep.
can wait for another setup.
Yep.
Now, sometimes it gets a little boring and you have to wait a few weeks or months, right?
Yep.
But I mean, who cares what everyone else is doing?
Exactly.
Do what makes you comfortable. Do
This
what
here,
makes you happy.
this mania here on the 4 hour Bitcoin chart, we've got all this kind of strange price action. At the end of the day, it didn't break any trend, right?
Right.
It didn't
Right.
break any trend. And what do we know? So here's our failed breakout. We're going to roll over and do what? Take out the previous wave's low, which brings us back down to the value range again. Now, I just want to go back to Apple for you for a second because it's the similar kind of
Yeah.
nonsense, but I'm just going to go to the weekly chart where we see all of this
I'm
kind of,
waiting for it to, I want it to break that wedge.
oh, it's going to break. Don't worry. So this,
Shh.
this year,
Do not tempt the market gods.
no,
No
no,
end zone dancing. No, go ahead.
no. So doesn't this look the same as that 4 hour Bitcoin that we just saw? You have all
Yes.
this kind of
Yes.
crazy, but nothing changed, right? You have all this nonsensical price action, but it's the trend that's the most important because our script tells us to get in up here. It gave us plenty of time to do it. So you can deal with this stuff because you got a good entry.
Now, the
And
thing I want to say real quick, Mark,
yeah,
before I go ahead, before
no, I
I
just want
forget,
to say we fall
and
into this gap,
yeah,
and Ken's very happy.
yeah, I will be very happy. But I'm not doing it just to be Mr. Bear, and I'm doing it because it's what I see,
Hmm.
and it's a safe way. It's a safe way to play this setup that I see happening around this is it the summer solstice
Yeah, I
tomorrow
think so.
or Saturday? Yeah, and no, I'm not going to go there. There's some weird esoteric stuff going on that you have back in I have in the back of my head. But I want to say this about Bitcoin so everyone understands it. Um, it's a weird asset. It's because um, it has rare attributes like gold. It has monetary attributes, which is all true. But because of the nature of its shareholder base or its ownership base, it also can act like the regular equity markets. So there's a period of time it acts like the equity markets, and then it throws on its store value coat unexpectedly. So it's a lot like gold in that it gold is a commodity and it's also a currency. It's nobody's liability. It's the same as Bitcoin. The difference is the Bitcoin will trade with the markets and then suddenly not trade with the markets. Does that make sense? I hope. And it's like this Gumby effect. It's because of the capital that's invested in it. So when I look at it charting, like I was actually looking um, to get long bid X, but I never did it because of it. I'm not certain it's going to trade um, like it should hold here. And that's what Mark's just confirmed me that I'll wait. I'm going to wait on that trade. Sorry, Mark. Go ahead.
No, this is the Bitcoin weekly chart, and like again, it doesn't matter the symbol of or the asset or the time frame. We know what we see, and it's again, once you see these things, it's hard to unsee them. So here's our Bitcoin weekly chart. This yellow line was the same line that we showed on the 4 hour. It's just on this weekly. But what are we doing? Right? We're starting to sense a little bit of a fade in the 5 EMA, and this candle is just so far failing the 5, but it's still above the T line. So still in a bullish trend. But we have to look at the risk on the chart, right? Because it's one thing for us to hit home runs, right? Hit those big fat pitches. But we don't want to trip and fall over second base as we're trying to round it either. So, sometimes it just makes sense to stay there and be safe. If you
Yeah.
hold the T line, you could be just doing, because here's what everyone's thinking: oh my goodness, it's going to roll over and then it's going to be Armageddon.
Not, no,
Not necessarily, right? So
not necessarily. Yep.
this could just simply be, right, here's your nice entry signal, here's our early entry down here. You get a nice move up. If you fail the T-line, you're certainly going to come back to the 20. It would be the first touch of the 20, and the probabilities are a little higher that you get some support or bounce. If that's the case, what's going to happen? Price comes down, bounces in and around the 20, and moves higher to take out the previous wave's high, and that's how you take out that high. If it fails the 20, then what do we look for? We look for the next thing below, which will be the 50. I'm just going to light the 200 here while we're here. It would be the 50. And where's the 50? Ay, ay, ay. In the middle of these two gaps. And all of this up here, this light gray, kind of consider that a premium in very light volume. Right? So all the value and all the concentrated is down here in this green zone. If price hits these gaps, it'll hit them hard. Right? And
Yeah, I
think
think that's why I'm going to sit. I had toyed with the idea, and this is just toying with an idea of getting long bid X, but then putting like it's trading at 50. But I'm going to skip. I had toyed with the idea of getting long bid X 51-ish, somewhere in there, and then just stop at 49, But I think given the world events and everything, I'm just going to stand aside. I'm going to have to drop pretty soon. And if anyone has any questions,
Yeah, I was just going to say, if you guys have questions, now's the time to ask them.
I don't know if I have an answer, but I can sure bullshit my way through it.
I think what's good to hear in many respects is that, Ken comes from a professional, sophisticated environment. And when it comes to managing money, and Ken can look at our charts and actually go, this stuff works.
Yeah, right? But I do want to be fair, full disclosure. I've always been a rebel. Even, in 87 when we were 100% cash, when I was 27 years old. And I've always been not a contrarian for contrarian's sake, but I've always been not a crowd runner because for the obvious reasons. It's paid off for me. And it's just a recent evolution the last 15 years where I've said, it's not going to hurt you to be a crowd runner. That's where the crowd alpha I talk about, right? Mm-hmm. So anyway, somebody had a question. I'll shut up.
Yeah, if anyone does, just you pipe up. I can't see if you're raising your hand, so just ask away. There's no reason to be shy. Whether it's for Ken or for me, it doesn't really matter. So,
go ahead, Mike.
Yeah, no, I was just gonna ask because what you mentioned there about creating a spreadsheet on how to just keep track of your portfolios and that. How about do you have any templates you're able to send us? Because
I think I have it in I can send it. I'm old school, so you have to recognize I am purposely. There's an Excel spreadsheet that's an any day calendar, right? And it has 1 through 31 on the left, and it has the calendar year on the right, January, February, March, April, May. And then you can Google it, and I think it's out there, but it's getting pretty old. And this is just me. I know I can do it electronically, but for each account, and then your starting account, I physically print it off. I have 7 years of them. And when I hit a high water mark, I circle it and put HWM. And then the purpose, and it's old school, and I understand, it's old school, and I apologize, but I think it works. There's a truth to physically looking at your 3 screens, right? And then you have that file there, and you physically look at your portfolio and your accounts. You take a pen and you go to the physical spreadsheet and you write the number. I drop the zeros, so it's like an alpha. It's like it's shorthand. Like I'll drop the zeros, so I know, and then I'm able to. I only do it once a week, so I leave space. And the most important is the month end and the quarter ends, and then I leave space enough to write like little notes. And I have an idea of how I'm positioned, and I look at things in aggregate and I look at them individually, and I do some for some people, family and friends. And for me, physically writing the number down and having that and looking at the file really, really helps on Sundays or Saturdays. And most of the weekends I take off. I only work a couple of hours on the weekends. I purposely divorce myself from this, and I'll miss a lot. Like I'll come in and ask Mark, "Hey, this or that," but that's purposeful. So for me, it's called Excel Any Day Calendar. If you Google that, it may come up. So that's for me. That works for me. Whatever works. And what I'm really trying to do, Mike, I'm trying to get a feel for my thinking, right, and my portfolio. And when I sort it by percentages, like Fidelity will let you sort it by percentages. And I'm trying to get a feel for when I go to Koifin. If you go to the Koifin website, they have a great tool, excuse me. Let me find that.
Coin.
Go ahead.
So how do you spell Koifin?
Koifin, KOYFIN. I don't pay the subscription because it's free. And then if you go to Koifin, there'll be a chart in the middle, right? You'll see normalized performance. And I enlarge that if you go to koifin.com, right? And then I have created a template. And I don't even know how I saved it, but you can create a template. And my template is the S&P, the NASDAQ, XLK, XLE, XLP, XLI, the 8 big ETFs, and those are the sectors. And then you can add a ticker like International EEM. So then up there you can change your time frames. You can easily change your time frames from 1 day, 5 days, year to date, 1 year, 10 year, all. So in a long-winded way, what it's telling you is by keeping that calendar, and I'm knowing my percentages, I know my portfolio, and then I can go to the Koifin, and it'll rank all those sectors. And then I can add GLD or I can add EEM, and it'll chart you, and it'll tell you year to date, the number one sector right now is going to be, and this is going to surprise a lot of people. I added EEM and I didn't add gold or other commodities or Bitcoin yet. I could do that. EEM, which is the international emerging markets, is up 12.5%. It's beating all of them, right? So you'd win a lot of beer bets in a bar. Like, what's the number one ETF year to date? People don't. It's happening.
There
so anyway,
that's EEM.
I mean, I'm not preaching that. I'm just telling you that there's things going on. What would be a symbol for Bitcoin? BITI.
Or just regular Bitcoin, or?
Well, that Koifin will pick up like an ETF, BITI.
Sure.
Yeah, I'll do that. So I added gold, and then I added BITI, and BITI is down 14. I guess that's a short, maybe. I don't know. So anyway, to answer your question, I keep that spreadsheet. So then I know physically, and then I scroll on those time frames, using my template of the Invesco ETFs. So then I know if I'm in sync with the markets or out of sync. I like to be out of sync as long as it's performing. Anyway, not sorry. That's how you do it. That's how I do it. So, I mean, the Koifin site, free one, is excellent. Build you a template in that chart in the middle, and then you can move time frames, daily, weekly, monthly, year to date, 1 month, day. It's awesome. So we very quickly, okay, and this shouldn't be any surprise, month to date. Everybody in this room should be able to guess what the month to date performer is based on the world events. XLE, month to date is 8%. Everyone else is flat to down to up, technology's up 4%.
Energy sector, actually.
Huh?
Oh no, I'm just
talking
adding
out loud.
my,
Okay.
Yeah, sorry. That was just
No, I mean, just go. I mean, I'm telling you what works for me. And what you're trying to do, what I'm trying to do is get as much data quickly, free, and efficiently so that I know where I'm at in the game, right? And you can play around and you can add securities when you blow it up, the arrow up, and then you have, I can't remember how I created it, but I created a template, just put the XLs, all the sectors. You can create your own. I mean, I like to look at these XLs, and then you add a symbol, and the free version won't give you the return, but you can take your mouse and guess. You don't have to pay for it. You take your mouse, and then that'll work. So hopefully that answered your question.
Yeah, no, that was useful. I'm gonna play around with it, and
yeah, you got to play around with it. I mean, I didn't just wake up one morning and oh, this is here. This is years of trying to make my job easier, but it's not just making it easier, it's effective, and it's true. And I've learned over the years it's true, and I just proved it. The sector that's doing the best is energy. Now that's going to be up to you whether you want to, with the world events, whether you want to try to play energy or not. That's a whole nother call. We won't even go into it.
Yeah. And the other thing too is that this, you could have, we had oil companies doing well, and then we had oil not doing well at all. Right? So there isn't always a parallel walk, right? Like you can have the commodity in this case getting kicked in the teeth, but yet for some reason the companies within that sector are actually performing well. So you're not going to get in there.
Yeah, I mean, we're not going to get into that, but I'll tell everyone a story. In COVID year, when oil went negative, I had a friend that actually got paid to take a contract of oil, and then he was going to get delivered on, and he's like, holy shit, I got to find tanks. So he physically, just to prove he could do it, he had to find a bunch of empty tanks in West Texas to have the oil delivered to, and he did it. And then he turned around and sold it, but it was way too much work.
Wow.
But he wanted to prove that he could actually do it, like, because it was negative, right?
Yeah.
And so back in the fall, though, I was hunting that sector, and in October, when it made a secondary low, a higher low, and there were divergences, and I didn't know Mark then, but I'm sure he was looking at it too. The stocks, everybody hated them. And, I had to walk around the ranch 3 times because this is a little bit too much information, but I take a lot of other research, and I'm a hybrid, right? And I'm a hybrid. I'm a technical, and I like to look at the data. And there's a great commodity house that I take their research, and they put out basically a piece and they said Schlumberger was $14 a share in 1980. It was the number one stock in the S&P 500 in 1980. Well, I was alive then. I remember that. I was 20. So I was looking at those charts, and I put oil stocks. And it made a home run to 22. It was 2 years. It was a year and a half. But that's really hard to do. And the reason I had to walk around the ranch 3 times, because I had to control myself. And I wish I hadn't controlled myself. St. Mary's was $2.50 a share. And this is why this is the greatest game you can learn. 3D chess. It's the greatest game you can learn and get good at. And your mind will stay sharp. Better than doing crossword puzzles and minds, word find, whatever. Yeah. I mean, so St. Mary's was $2.50, $3 a share. and I'm going to use numbers because I have to. But a $25,000 or a $50,000 investment would have made you 5 million bucks. That's what happens in these markets. Okay, and and running with the crowd is great for crowd alpha, right? Crowd alpha. I do it. I'm not afraid of it. But where you're going to make your money is in the edge, right? Where you're going to make your money in the edge. And what I mean by in the edge is you're going to find an area where the 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 inflection point is happening. Something new in technology where you're reasonably early or there's something changing in the environment and you can buy a security um, for next to nothing and at 10x's, 5x's. It's out there. It's hard to do, but I'm telling you, it's out there. I tell the story and I'm really pissed about it, but it's the true story because I like natural gas and what have you. There's a company in Texas called Comstock Resources. It literally was something I traded in '03. I bought at 3 and it ran to 35. And I owned a lot of it. Okay, so I go back and I've been charting it for 25 years. So the stock breaks down to 10, 8, 9, and I buy a slug and it goes down and I'm like, you son of a bitch, you and it broke down and it went up over my cost and I sold a third and then it went up 3 points and I sold the rest. It's $30 a share today. So, you're not going to make perfection, but I'm a huge believer in the opportunities that the marketplace provides you. A huge believer. I'm sorry. Next question.
The best part about it, though, Ken, is that we can actually chart its presumed designated destination. We really
right.
can. Like,
yeah, the problem with Comstock was at the same time I was buying it, and you guys may get a chuckle out of it. Mark knows what I'm getting ready to say. So the same time I was buying, see, it had an inverted head and shoulders on the weekly, right? And they gave you a big red, I'm charting it on the weekly, and it gave you a big red candle and it made me shit my pants, right? That I'm wrong, but I held. And then that green candle was up and I sold a third. Then it went back down. I shit my pants again because it was a pretty big position. So then I got those two green candles up around 12, 13. I made money on it, net. I made 5 figures. Well, this is a coma trade. I'd have been better off if I didn't overthink, right? Oh, wait a minute. Let me overthink this because I'm a big believer to long term in natural gas. Big believer. It's not going to stay 3 and 4 forever. Long term. What is long term? I can't tell you. It could be 6 months, could be 6 years, could be 6 days. Look at that green candle. It hit 31. You talk about, so that was a coma trade. I would have been better off in a coma, waking up and saying, oh, look. But this is why you hunt where people don't hunt. And that's a totally different ball of wax. But I use Mark's technique to tell me when to take the shots and when not, in addition. So.
And we can do it really on any time frame. And this is just the NASDAQ 100. This is a 4-hour. So we knew.
I don't like that chart, by the way.
Well,
it looks like it's rolling over
in a second, but
tomorrow.
We knew this was the upper value range and the lower range, and then the POC. So we knew what it was ranging. So of course you break the 20 and the 50. So you break those major moving averages. You break one level, you find the next, and I kind of believe that's probably what we're looking for, the 200. Now, what's the 200 sitting next to? The point of control. Where's price? Still within this volume gap, sliding down to probably find this shelf here, which will end up being the POC and the 200. And that's on the 4-hour. And if we stretch it out even onto a weekly, now it's going to get a little uglier. Like, here we are. We're basically at 2 equal tops. Right, so the whole world, if they're looking at the weekly, is probably saying, is this a double top? Possibly. Or is it just going to be a retracement back to the 20 and 50 on the weekly? You bounce and then you take the previous waves higher.
Yeah.
Or you fail,
yep.
You find the POC and then slip into this big volume gap where you have the 200 weekly sitting there as well. This stuff looks nonsensical. It doesn't look doable. Well, that can't happen. That's impossible. No way price is going to fall that much. Well, we know that it can, and we know that it does. And the reason it does is because it's simply looking for another level that's been spread out due to parabolic price. We didn't complain.
Yeah.
If you don't complain about it on the way up, you can't complain about it on the way down.
Yeah, it's a very, I think it's a dangerous time. I'm going to have to drop in 5 minutes. Any other questions?
Bueller?
Good. I love the sessions. But yeah, no, I'm okay for now.
Poor Mike, his head is spinning right now, I can tell. Yeah.
I am, you know me.
Well, I'm purposely holding back, Mike. Sorry. There's a whole,
No,
I could
it's
go
all
into
right.
all kinds of stuff, but just keep being a sponge. That's all you can do. Hell, I'm 64 years old and I'm learning nonstop.
One of the things
Nonstop.
that we talk about here is doing what we're told, right? Which is difficult for most people, doing what we're told. But I say that in the context of doing what we're told on the chart, right? So if the market tells us that we should be buying, then we should be buying. Who are we to argue, right, about what's right and what's wrong? Like this 4-hour Bitcoin chart is just another great example. The chart says buy, so you buy. The chart says sell or short, so you do that, right? And
Yeah.
over these time frames, there's lots of wiggle room in here as long as you're not using too much leverage, right? If
Right.
you're using too much leverage, you're never going to be able to manage the ebb and flow of price action, and you'll eventually get stopped out even if you're in a good run. So you got to balance all that out.
These are tools. Okay. If there's no more questions, I'll end with a funny story. Well, I don't know how funny it is, but it's related to human behavior, right? Just you accept who you are. Accept, that for fun, I used to, and I will occasionally go into auctions just to see what's going on. So we're down on the coast at the Oyster Fest of all places, and they're raising money for the fire department. And everyone, all my friends are everything. We rented a big house, and we're old, but we enjoy ourselves when it's time. And so I go in the tent, and they're auctioning off 6 oyster shell crosses. And I'm a believer, so I'm like, this is interesting, So the first one went for like $250, the second one went for $275, and I'm watching the little old lady who made them, handmade them, and she had this look on her face, and I was like, these things are worth a lot more. You motherfuckers are, you're, and the money's going to the fire department, but her heart's breaking. She made these things, by hand with oyster shells. So I started bidding up the next one. I got it up to 600. I got the next one to 7. I think the last one, I never had to buy one. I drove the price because all these people in the tent were like, who's that? I had a beer. Who's that guy over there? And I literally drove the price. I made the fire department an extra 4 times, $2,000. But it's the human behavior of crowds, right? And what Mark's doing, he's telling you it's money flow and it's crowds. We're animals, and we act certain ways. And the template on that is the numbers and the fractals and the truth, right? Of certain pi and fractals. But the crowd was willing to play because everyone had a few cocktails, and they're like, hey, we're not letting this son of a bitch. We don't know who he is. It was a small town where the oyster boats come in, and it was fun as hell. And everyone just shook their heads at me, and they go, you do that for fun? I go, yeah, I do that for fun. So that's what you're trying to, manage and get around. Just like the Comstock Resources story, the fall of 2020 story, and other names, when there's opportunity in these markets, and don't be afraid of them. And it's okay. It's okay to miss a trade. It's okay to make a mistake. Just don't blow up.
Yep.
All right.
Yep, that's
Everyone
the
have
best
a
advice
go
you
ahead.
could give. It's okay to make a mistake, but just don't blow yourself up.
Yep. Anyone else before I go?
Thanks for that, man.
Thanks very
All
much,
right.
Vic.
Okay.
All right, guys. Have a good Friday. And these charts are going to turn on tomorrow's open, probably,
Yeah,
most likely.
this chart of the Qs, the weekly, should be enough to scare you a little bit.
Well, I mean, yeah. I mean, you can't. I mean, it's fourth turning stuff. I'll leave you with that. Everybody go Google fourth turning and figure it out. Take care. Bye
Okay,
bye.
thanks, Ken.
Bye.
Hey guys,
Ah, it's
are you
another
okay
good
there,
session,
Mike?
man. Yeah, yeah, I'm good. I'm good. I'm just I've been looking at Nasdaq for a while. But you know what? The thing about over leveraging kind of hit home because uh this week has been sort of over leveraged and unfortunately ended up blowing one of my prop accounts. I've saved the other one. But yeah, that over leveraging is ain't a joke. Like because I saw such good positions with Nasdaq, but
Yeah. No, I
it
hear you.
kept
Well,
yeah, it kept like pulling up, and then I get stopped out, and then I was like, right, it's gonna
but
give me another opportunity. But at that point, I think after because I started like over trading as well, trying to
yeah,
like recover, and then start building a negative like process. So I didn't trade yesterday, but I entered the position today. And it's doing okay right now.
well,
So I'm just keeping an eye on that.
I'm gonna commend you for sharing your experience, right? Because not everybody is willing to say I made a mistake, right? Usually you hear, "Oh, I just hit home runs. That's all I do. Why don't you hit home runs all the time?" Right? That's the kind of stuff you typically hear, and it's also not necessarily truthful, is it? Because we
No,
know through our own experiences that nobody hits home runs all the time, right? We just don't. It's not doable. We can manage our risk, but we're not going to hit home runs all the time. Um, and
100%.
it's interesting, and here's what I would like to say. So, would I be wrong to say that ultimately you were correct in the destination or in the direction that you thought price was going?
Yeah,
Okay, so that's how you know that you use too much juice, right? Like, and it's kind of conflicting because here you have a trading style that you know works, right? And your challenge now is to balance out, if you're leverage trading, the leverage to the experience that you have in how you're charting, right? And that's something that everybody will experience. So, for example, um, I preach more often than not to stay on the longer time frames, but there are times when I'll scalp. Just like, I enjoy it just as much as the next person and I like it, right? Here's the problem I face though. I have to change my mindset to adjust it from the time frame that I'm trading, which is super short, and the leverage that I'm using, which is probably higher. I have to be willing mentally to cut those trades quickly because there's not a lot of time to think about it, right? So I have to balance out what we're doing technically on our chart, trying to understand where price is going, with the volatility. Kind of comes back to what Ken was talking about size, scale, and pace, right? If you're using too much size, which ultimately you would be doing if you're over leveraged, that's going to be a problem. So, and I go through the same stuff. Like if I'm scalping, chances are like I'm going to get stopped out a lot because I don't want to lose anything. I would rather get stopped out even than not have a chance to recover from price getting away from me if I'm suddenly on the wrong side of it. So there's an adjustment that you have to go through. So it's not your charting that was the problem, right? And this is a good takeaway. This is why you can have a journal to document this stuff. And I have a one that I could provide you guys that I've built if you wanted to use it. Um,
yeah, yeah. I'd love that because if there's one thing I'm terrible at is journaling. My trades. Like I do have a personal journal that I put into whenever, um things get too much in my head. It's always good to put
Yeah.
that down on pen and paper. But with my trading one, I don't have a journal that I actually like specifically for trading. So yeah, I'd love if you could send me it. That way I
Yes,
can keep
I will.
track
So what
for
I'll
like
do
long.
is I've put together a piece called Fibs, Fractals, and Filters. It's on my X page. I think it goes back to the 26th of May. There's a link there, but um, if you want that, that's a good document to read. So you can get that from my X page. I also have one on fear that I can get you, Mike, and I can also get you the journal template and stuff as well.
I'll greatly appreciate that.
Right?
I would greatly appreciate that. Like I said, it was mainly like I said with when you're scalping, especially because I like to more time. I've had my success in the 1 hour time frames,
Mm-hmm.
um, but it's the scalping with the 15-minute ones. That's where a lot of my mistakes have happened. Where I've blown a few accounts because I've been in a position and I've been right in my charting, but it's when you see that pullback, that drawdown,
Yeah.
and like you said, like I'd rather be out than get stopped out.
Mm-hmm.
And then when you add all them up, you because you look at your account and you're like, right, I'm getting more and more and more into negative, losing more and more and more trades. And then you're like, right, let me
Do
like
this.
that's when you start over leveraging and start doing more. And then before you know it, it's like I
Yeah.
went from I went from following my rules to now I'm risking
Chasing.
five. Yeah, I'm chasing these trades and I've blown 5%
Right.
of my account
And
in like a couple of hours, and it's like it hits you hard.
so
That's why you have to take some
that,
time.
yeah. So that, what you just described, I kind of would articulate it as feeling as though you're being chased around your chart. And when I feel that way, I'm just going to kill what I'm running and get the hell out, maybe go for a walk because I can't recover from that stuff easily. When I feel like I'm being chased all around the chart, I just, there's no recovering. I just got to get the hell out and collect myself and then get back to doing what's normal. But this is the 5 minute Bitcoin chart. I just noticed that price started to spike a little bit. But, people will say, well, how can you catch these moves? Right? Well, here's how we catch them. We set alerts, like we talked about before, right? The 5 minutes, a little quick moving, but let's just use the 15 as an example. What are we looking for? We're looking for, the 5 EMA crossing up through the T line, just as an example, and that draws our attention to the chart. We don't always get these parabolic candles, obviously, but that's what you need to see, right? That's how you're at the right place at the right time. Where do you think this candle is going to hit some resistance? How about up here at the upper value range while we're watching?
Yeah, I think it will.
So, but yeah, so how do we deal with this stuff? Well, this is a great example of a 15-minute, right? So you were short at the upper value range. You started showing the 5 started turning red and all that stuff. Now you've closed below the T line. Now you've got the 5 EMA coming down through the T line. There's price just continues to fade. Here's our little fake out thing again that we showed before. On the 4 hour, here it is showing itself on a 15. And again, what's more important? The candles or the trend?
Trend.
Right? The trend. These candles cause us all kinds of anxiety. Should I exit the trade? Oh no, geez, look at the size of that candle. I got to get out. Well, because you don't know what's coming on the other side of each candle we see. However, we kind of do. We kind of do. Right?
Yeah, it shows you what's happening.
It shows us what's happening. I know it feels like, we can end this session. You can sit in front of your screens and be faced with this very same scenario right here, right? Only 15 minutes after we go off air. And you'll be panicking, trying to, you know what I mean? When you actually see it in real time. Like you'll see that opportunity and you go, oh my God, I don't know. Like, yeah. It just looks like it might want to run. And you don't take it, right? You don't take the short. And then you're like, dang, I should have taken a short, right? That's why we show you these things over various time frames on different assets, because I want you to understand that this stuff repeats itself over and over and over again. It just does. This time frame is really clean for Bitcoin today. Not always is it, but it is today. Just add some simple moving averages here quickly. And lo and behold, right? Where are we finding
Is that blue one the? What's that one where the candles hit at the moment? Is that 200?
That's the 200 and the 50 MA.
Okay.
There's always something there causing you to, pause or at those support and resistance levels. So 7 seconds left on this candle. Is it going to just completely fade all the way back down? We're going to find out.
Yeah, see, it's them sort of moves
wick.
that.
It opened up at the top of this candle, so it will eat that wick pretty quick.
Mm.
And, again, I think maybe it wants this up here. And again, it doesn't mean that price is going, when I say that, I don't expect it to stay there forever. I'm just pointing it out as that's a target, that's a place where price has consistently gone in the past. And as long as we're trending higher under a confirmed uptrend using all the metrics that we use, you can feel comfortable saying that. And in order to make sense of things, we adjust our time frames. You might be on a time frame that just looks completely chaotic. Stretch the time frame out. Try and take the noise out. Now this is the 4-hour Bitcoin chart. Let's just look here really quick. If we go to the upside, what do you think we're looking for? We don't have a clear buy signal anywhere yet. Not even on the 1 hour, the 15 we must, and the 30 we must. Nope, not yet.
So for it to be like a clear buy signal, if I'm not mistaken, we'd want to see it sort of like pull back to that point of control, right? And then, because it's not taking out the full candle. So, or like, how would you? What would be? Oh, you'd be looking at a specific candle, like a reversal candle, isn't it?
Yeah. So if I'm,
Yeah.
I'm sitting here thinking to myself, would I try and short this up here somewhere? I don't know yet.
Because we're trading below
I think
200
this
on
is
the
gonna
high
run.
time frame.
See, now you've broken the 200 on the 5 minute.
Yeah.
And you're at the upper value range on the 5 minute. So maybe this is where it pauses. But if it breaks through, you've got another gap up here, which would let it, might want to take out this high if once it's done with this one. So it's just doing like we show on when price rolls over, it takes out the previous wave's low. Well, on the way up, it's just taking out the highs. Now, if you fail here, or you start to fade at the upper value range and fall into that gap, it makes coming back to the POC and likely the 50 and or 20 reasonable. The difference with crypto compared to stocks, though, is like you just don't see moves like this in the stock market all the time. Yeah, they show up, but in crypto, they're here every day, everywhere. And that's just the volatility difference. But volatility aside, we have a system that allows you to manage it. That's the beauty of it. Current price is looking for past price. That's what's happening. Like how we always talk about how the POC, for example, is a draw for price, like a magnet. Well, and it's demonstrating that to you right now on this candle, just like it did on this one, and this one even here. It's a draw for price like a magnet.
So you'd have been like good to so go long just to the POC, lock in some profit.
Absolutely. We talk about the set it and forget it kind of stuff, right? knowing this is an hourly chart, you might be in this trade for a while, but that POC would certainly be a target. Let's just throw a couple things on here. We're already here. So if you break through the POC, then you start looking up at the 200. And all that can change in the blink of an eye, right? Everything is, that's what it looks like for now. But all that can change quick. But let's say it does break out, Mike. So if it breaks out and breaks the 20 and 50, because essentially you're getting a nice green candle at a major, like at the 50, which I would like. Let's say it closes here. This is a gap, right? This is the price would run up into here and could find the 200 pretty fast.
Yeah, it could.
And how, and the only thing that we can do to try and determine whether or not we're thinking in the right lines is just back our time frames up. Now this is the 15 now. And on the 15, okay, you've breached the 50 and the 20, so you're hoping you hold it. If you don't hold it, where are you coming back to?
Point of control.
Probably, yeah, the point of control, the 5 EMA, the T line, anywhere in that neighborhood.
Yeah.
And believe it or not, if it was to hold here, you'd still be in a confirmed uptrend, right? And this is where it gets chaotic for people, is that you get this massive green candle up, okay, then you short it on the way down, but then it bounces on you. You know what I mean? Like you think it's falling off a cliff, and then it comes back to a particular level, and then it bounces. It's the same old adage, right? Someone will say, oh, do the opposite of what I do when they're trading. So, it's the guy says, oh, I went long on this candle, and the guy next to him shorted the top of it. And then the guy says, oh, every time I buy something, it just tanks. Well, it's just because you didn't recognize maybe where you were buying it and where price was as well. You didn't realize that was a major area of resistance, specifically because it was the 50 and the 200 MA, right? That kind of stuff. But as soon as you have an understanding of all those things, you roll that into your methodology, and you're like, yeah, you know what? I'm not making as many mistakes. I understand what's going on the chart, blah, 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 right?
And I think that's where, like, when you start to chase trades, you actually don't realize where you're buying at.
Oh, no, you're absolutely right.
You're looking at that big bullish candle, you're like, right, so you're thinking it's a breakout, and then you end up buying at the close of the candle, and then it pulls back because it's hit that resistance point, and you're like,
And then you realize that you're on a completely different time frame than you thought you were on, and stuff like that. Yeah. So.
Yeah, that's when you start crying, start closing, and eventually just so you have to like stop, run,
right.
Go for a run, and then come back.
Yeah, and
let the market give you an opportunity to trade again.
Yeah. And that's why the simplicity is key. The only thing on the chart is a volume profile and 2 EMAs, and it's incredibly tradable, right? Because we know and we understand how price moves. And that is, the most important thing. If we can understand how price moves. And it doesn't matter the time frame. This is ETHFI again, could be anything else, right? We're in a downtrend, whether we like it or not. This is a daily, this is a snap back down essentially. And you had a lot of clue that price was fading. What you do with the information, like that's the fat pitch that Ken was talking about, just as an example, right? Just blow this up. That's your fat pitch. We know what these things mean. We don't necessarily know if they're going to be home runs or not, but I think you can put the ball in play, right? At the very least, give yourself an opportunity to take a trade that runs. And if you happen to get stopped out or something, well, that's the price of doing business. You get stopped out. You get to play another day so that you do get one that runs. And right now, when we see price trading like this, it's so simple. You just don't take a long. Right? If this is the time frame you're trading, you're not taking a long in here. You're just waiting. You're either short or you're waiting. And it doesn't matter what the asset is. Right? If it's telling you to stay short, then stay short. It told you in here to stay short, so you stayed short. Layer's probably a better example, right? Like we've looked at before. And one day we're going to look at this chart and it's going to have a giant green candle, right? But this thing has, even though these are simply green candles in the continuation of a downtrend, at no time did this thing break the downtrend. That it started on the 6th of May, and what is it now? The 19th of June. It's over a month, and it hasn't flashed a buy signal on the daily. And how much money do you think has been lost trying to long this chart?
A stupid amount.
A stupid amount. And it's so unnecessary. It's completely unnecessary. It's all you have to do is follow the chart, do what you're told. If you're trading the daily time frame on this thing and you were short, you'd still be short. Full stop. Because the chart gave you no indication that it's changed its mind. It just hasn't. It just hasn't.
I think that's where sometimes I do forget. Like some of my, and again, this is where journaling comes into play, because I can review, and in my head, I know like where I make my mistakes. I'm like, it's because you didn't do as you're told. And
That's right.
So like I said, with the NASDAQ, the signals, like, we're trading, well, we were sort of like between the moving averages, and I should have waited for clear confirmation, because some of the positions I entered were, it was like basically like a point of resistance on the 200.
Yeah. So, and then there's the doing what you're told when you get the signal, right? And then there's the stuff that the market tells us in advance, like we talked about a little bit earlier today. Like this candle here, this overbought stochastic RSI combined with the overbought and arcing Fisher. That's a setup that I like. Right? The only thing that would make it better for me for a short would be that the moving average and signal line on the MACD would be below zero. That would be the only thing that would probably make it a little bit more attractive, because I run the risk when the moving average and signal line are above zero that something bullish can still catch me off guard. But when it's below zero, the chances of that are a lot slimmer. But this is your NASDAQ chart, and again, could be any chart, but this chart tells our traders that you had lots of opportunity to go short in advance. You're hanging on to this shelf with the risk of falling into a gap. Like, all the signs are there. Look at the divergence on the stochastic RSI. Like there's some momentum to this, it looks like, at least on this daily. So, but again, we're not surprised and we're not freaked out. There's no reason to be scared. You can manage everything now that you're seeing on the chart. Right? There was no reason to be scared when you went long here, and there's no reason to be scared for taking a short. You mitigate your risk, right? You make sure you run a reasonable stop, both long and short, and don't get greedy. And like Ken was saying, the scale and the pace and size of your trades. Just balance all of that out and you guys will be fine, right? Like we're literally telling you, or the market's literally telling you what to do. So, but anything else, guys? Or
No, I'm just gonna keep an eye on this one. Is it me, or like, because now is it paused for a moment, because it doesn't look like the price is moving at all?
well, it's because it's a short day, so the market's actually closed now. That's why.
I thought my system crashed for a minute.
No, you're okay. You're not having a stroke or anything like that. You're totally
fine. Time zones and that always mess me up. So, yeah.
Here we go. Here's our Bitcoin Look at this thing, proving us exactly right. Look at, what do we talk about, these two equal tops and all this kind of stuff, you know, blah, blah. Right to the POC, let's see if it sticks. Even if it fades down to the 5 EMA, because it hasn't breached, would still be in an uptrend. But it's crazy how this stuff works.
Yeah, it's very repetitive.
It is. It's incredibly repetitive. Painstakingly repetitive, to be honest. So
I
it
think
really
it's
is.
patient. What messes us up is just lack of patience. Because to wait for it to just pull back to that point of control, someone would have bought it at the close of that
Yeah.
green candle, thinking that's my signal, and it's pulled back and they're seeing this drawdown. They're like, ugh, let's
Okay.
jump out. What's wrong?
So now we've shortened our time frame just to show you why we use fractal analysis. So here's the point of, or sorry, here's the upper value range on the 5 minute. You spiked up, tagged it, started to roll over into the volume gap. Right. And again, just because you're starting to roll over doesn't necessarily mean that it's Armageddon. Price can still get supported in these areas, right? But you have targets now, and knowing where these volume gaps are, it gives you the opportunity to trade in and out of them. This is a perfect real-time example of what we're talking about. Perfect real-time example. Price popped, went to the POC, and then found the upper value range, like in 3 candles. Those just they give you targets. Why can't people monetize these moves? Because they don't have targets in place, right, to check them out of the trade automatically. Like, there's nothing more gratifying than waking up in the morning, right, and seeing that your stop didn't get triggered, but your target exit did. You did nothing except sleep, and that happened, right? Like, when people talk about this, guys, it's real. It just takes a little bit of time, a little bit of practice to get accustomed to the rules that we use. But other than that, this is one of the simplest things you could ever learn. So, but yeah, if there isn't anything else, I will catch you guys on Tuesday, and we will come back and do this all over again. So,
Right, just one more question. So I'm just looking at, so we're just looking at the crypto side. So on the daily, I've got 2150 and the 200 moving average, but the volume profile are up. It's showing the point of control is at the 200 on the daily. So currently we're still in an uptrend. And then when you switch to the 4-hour, we're trading below the 2150 and the 200. We've hit resistance on the point of control. We haven't broken it. So would that be fair to say, like, if I bring it back down, so if I mark out where the point of control is on the daily, so as a target, 94, about 94,747.
I have 96.5, let's just say, round it out.
Yeah, yeah, 96.5. So that's just above the 200. So possibly
96.5 is way down here.
So you're on the 4-hour.
Yep.
So yeah, so
There it
as
is.
we're below the
Yep,
moving
that's a
average.
good number. That's a good number.
Yeah. So as we're looking on the daily, and like I said, on the daily shows we're still in an uptrend.
Mhm.
On the 4-hour, it shows that it's giving us, well, I'm seeing signs that, we could potentially look to just take a small short to that 96.5 number, because that's a point of control on the daily. And then on the 1-hour, we're still below the 250 and the 21. So would I be right in saying, like, we don't know what's, well, this is
So
my thought process.
yeah,
I'd look to possibly short it to that number, and then
this is the
yeah.
12 hour that's a little less noisy, Mike, and I think it might
Mm,
add some clarity here for you. So this yellow horizontal line is that 9645 number that we just mentioned, right?
yeah.
Um, there's that top range. This is all on the right here. This is pretty light trading. So
Mm,
I would expect, and you're under sell signals, I would expect us to kind of grind our way back down to the upper value range
yeah.
and then see where we go. But these gaps are going to be tough to stay out of. It's going to take a lot of money to keep you up here. So I think these gaps are in play on the 12 hour. Certainly this one is, right?
Yeah. So it's just to wait and see what happens
Mm-hmm. But
if
but here's
we.
what we know, Mike. We know that we've
Mm,
broken one level and we've found the next, and then we've broken that level and we're looking for the next.
yeah.
Here it is.
Yeah, the 200.
Maybe you could throw 100 in there and maybe find it as well, but my guess is it's probably right in the middle of that gap. Oh shit, no, we're sitting right on it.
Mm,
So if you fail, look at the support that the 100 MA has been giving it on the 12 hour. All these wicks are kind of suspect because you
yeah.
always you always think, oh darn it, it might come back and test those wicks quite quickly. So you can see what you're getting support from. If you fail it, you're going to fall into that gap.
Alright.
That would be the most logical thing. Again, it's doesn't matter the time frame. We see this repeat and repeat and repeat and repeat. So
Yeah, because that's sort of like what I'm seeing, like
yeah,
when I go on the daily. So, um, but yeah, like keep an eye on it, see
yeah,
see how it plays out.
yeah.
Yeah.
No, that
Oh,
level on the daily is basically the POC. So 96.5 is the POC essentially.
yeah.
There's a lot of reasons, and this is a draw, right? We know that the point of control acts like a magnet, right? It's all that past price pulling at current price. So this gap is in play. There's no question about that. Alrighty.
Cool. Yeah.
Okay, guys. Well, listen. If you don't forget that if you need to get a hold of me, you can find me in our Telegram group. You can contact me anytime if you would like to entertain using this. I don't want to call it an indicator because ultimately what we're doing is trading a system, but it gives you the ability within one indicator to do all of that. You got 9 MAs, a volume profile, you got everything you need. All right, so I'll check you guys on Tuesday and have a good weekend, everybody.
You
Take care,
too,
guys.
man. You
Cheers.